Hello traders, and welcome to the tape reading video. This is Ken Calhoun, DayTradingUniversity.com, and in this lesson we're going to be looking at how to use time and sales. One of the very first techniques that I want to share with you is how to identify using what I call a pre-trade tape reading pattern where an entry is in a specific stock. In this example, let's take a look at Amazon.com. This is the morning of February 3rd, 2006, right on the opening bell. The stock is gapped down from an open of 43 all the way down to 38.5. It's making kind of a bear cup here and is right under the 38. I'd like to see if there's a short entry down here under, say 37.5, or if it's going to bounce long over that 38 whole number. This is what I look for in time and sales. First thing you want to look at is, and again, this is a critical technique, as you're looking, this is an actual transaction flow of what's going on in the stock right now. How fast does the price take out each 10-cent increment? Now, this stock is very heavily traded this morning. Obviously, you could see the volume bars up at near 400K, 400,000 shares per minute. Last minute, just under that, around 350K per minute. It's completing that minute's volume. As you can see, we're almost at 932. Where would you trade the stock? You make the call. The stock is gapped down. We're currently at 38. You see this large green candle, right? May be a good sign for a pivot. An experienced trader may look for an entry at, say, earliest 38.15, 38.15 for a long. Better trade, though, is always in the direction of the gap. And so if I were to trade long here at, say, 38.15, personally, I would only do so with light shares, say 300 shares, 500 at the most. I'd prefer to see the stock roll over, go south, and short it down at, say, 37.4. I'd be likely to put on a trade of, say, 700, 800, maybe even 1,000 shares if it gets down under 37.5, because that's the direction of the gap, and we like to go in the direction of the gap. Now, what are we looking at in the tape? There's three signals I like to share with you. And one of the first things I like to look at is a velocity signal, what I call a speed trap versus a speed bump. And one of the signals that I look for is what the stock does as it tests or touches each 10-cent increment in terms of the share size and the size imbalance. Now, the sizes column here shows you how many shares are going off at each trade, right? You have 100 shares, 150. Typically, on a lighter traded stock than this, you will see a much slower transaction flow, and you're looking for shares of, say, 400 or more to show you that there's strength in the tape. If you see a lot of 100, 200 share size trades, that's kind of the noise in the signal. And so one of the first things I want you to identify when you're looking at time and sales is the ratio of, or how many share sizes that do you have, or how many trades do you have that go off of at least 400 shares versus all the ones that are 1, 2, and 300 shares. And the more you have, the higher share size, the better in the direction of the trade, right? Now, one of the other things we're going to look at is the sizes imbalance. And in this, I want you to identify what type of strategies or what type of imbalance. For example, if you see a lot of large numbers on the right, that tells you that you have more of a sell pressure. If you have large numbers on the left, that means there's buy pressure in the tape. And again, you don't make decisions based on, let me find something that's moving a bit slower here. Let's go over and see how Google's doing. Same pattern with Google. You're looking for a sustained trend in pattern. Let's first take a look at the 2-day chart. Again, this is yesterday. This is today. This is a nice pattern. It's a gap down. It's bouncing off 390 support. I would like to see a short under, say, 389.5 or so, 389.7. That would be the best short continuation play. You can look for a bounce here, right? And this is one of the signals that I want to cover for you here is a possible pivot off of a whole number. And in this, I typically avoid trading for stock price this high within the first half point. I prefer to see a breakdown continuation. Let's see if this stock will get down to, say, 389.5. That's where I would be looking at for a short. Earliest long, 390.6 or so. Okay, so those are my calls. If I make the call, 390.6 on a long. Do you see the green candle forming? This is a 1-minute candle chart, right? And this is right after the opening bell. It's 5 minutes into the market. 390.6 would have activated. Let's see if it continues to move on up. I would trail a stop at, say, 390.5. One of the things that you want to do in these trades is make sure, and again, this is live. I have no idea where the stock is going to go from here. 391. I would be selling half of it, bang, right now and take close to half a point, right? I said 390.6. This is exciting to me. I'm doing this live here in the market for you. I have no idea what's going to happen next. This is live data we're working with. Where would you trail a stop? So let's say I went long, say 400 shares, and I sold 200 and made half a point, close to 3/4 of a point from 390.6. Where would you trail a stop? This is an absolutely essential technique to learn. I would trail a stop at, say, 390.7 in this stock because we're at 399, 390.1. Do you see the red candle here? That tells me that this stock's buying is starting to run into trouble, right? Right, the length of the whole real body, the green candle, and the second green candle is shaping up to be much smaller than that first green candle, right? So that tells me that buyers are a little more hesitant here, and I'd be trailing a close stop on this, 390.7. Let's trail a stop at, say, 391.2 here. We're at 391.45, 391.5. I would trail a stop at 391.2. Now this is an important kind of a second strategy, a speed bump. That's at each whole number. Make note of this. Each whole number you expect to see chop and consolidation and churn. Now this is a winning call for you from a pivot using the tape. We're at 390, and again, if this is all seeming like it's going fast for you, hey, welcome to day trading. That's how it works, folks. This is not, oh, let me fire off a trade and see how it works half an hour later. No, day trading is bang. You know, professional traders are in and out in a matter of usually no more than 3 to 8 minutes per round trip. So every single piece of that trade is critical. Where do you trail a stop here? We're at 392. I'd trail at what? 391.7. 391.7. This stock continues on up. We're in half position, winning long from 390.6, which was my call. We're at 392. This is great stuff. Now, what I want you to look for in the tape is this. Look to see if the sizes, the number on the right, starts to get bigger. If it does, and or the size, the average size stays down at 100, 200 shares significantly, then we would expect the price to start slowing down, right, in its move. And that's an early warning sign that time and sales can give to you. That's kind of a third signal to look at for what I call a speed trap versus speed bump. This is a speed bump. If you start to see the sizes column, say in an open long, start to get larger on the sell side. This is bid times ask. If you're looking at a level 2 box, which we don't anymore, but if you look at a level 2 box, this would be what's shown on the inside level 1 of a level 2 box, second by second. This gives you a microscope into what's going on in level 2, so you don't need level 2 anymore. Just use a tape, right? Professional trading at its best. This is it, 392.6. That's in the money by 2 points. Doesn't get much better than that. Now, we're not going to be greedy, right? Like I said, I would have closed out half the position way back here for whatever it was, half a point gain. I'd be trailing a stop here at 392.3 on the balance. With the stock priced up in the 300 a share, 400 a share, I'll use a 0.3 or so trailing stop. So 392.3, and again, I usually use, say, 4, 5, 6, 8 transactions to get me out. I'm not going to get out at the very first single trade, because that could be an out trade on Island or other, a mistaken trade. So I like to say, okay, now that tells me it's weak. Bang, I'm out of there. I'd sell the stock right now. Boom. Okay, I'm out of there. 2 points or 1.5 in the money from 390.6. Again, this is paper trading or practice trading. But this is exactly what you look for in time and sales. Now, this is a pivot. Does this mean that there's another entry here? Now, obviously, you would not be looking for another long here, right? Only a total idiot would do that. I'd be closing out any open long, right? Looking for a possible short at where? Say 391.5. Well, okay, it's starting to drop here under that. 391.3. We'll see if it gets down further. But this is the type of skill that you want to get at with the tape, is identifying using both the 1-minute candles, and again, you just see the emerging candle. This is an important part of how to exit trades using pivots, is using what I call a tape reversal signals. And one of the things that I want you to learn how to do is use the emerging candles. Again, this is 1-minute candles. What's really neat about this, and again, this is using eSignal, which I highly recommend, and it's what I've been using for many years full time. You see the size of the candle emerging in real time, and then you match that up with what's going on in time and sales. Where would I trail a cover stop on this? Say 391.6. Yeah, I'd cover out near even if it got to 391.6, maybe a 10-cent stop. If it continues on in my favor, great. If it gets down to 391 and a dime, yeah, I'd cover out half of it. Bang, cover out half of it now. Trail of cover, so we're in the money, right? This is a great pivot call too from where it was 391.5, 391.3 that I called. Here we're at 390.9. Now, we're in good shape as long as the number's on what side of the sizes column? Again, this is bid times ask. That's the number, X number, 3 times 1. Means there's a, now, what counts is the pattern of the tape, not a single data point, right? We're looking at what's going on big picture, say in 5 seconds worth of data points. What you're looking for here is, if the numbers on the right stay large, then we're safe. If the numbers on the left start to get big, then I start to get nervous short. Okay, we're in the money here nicely. I would trail a cover stop at, where are we at here? 391.2. I think I'd cover out all of this position right now because see that green candle in the tail here? Bang, I'd cover it out, take a small win, right? Good for at least 0.3 or so. Where would the next trade be? I'm going to look at some other stocks here for you, but this is a really good example of how to make it, and this is live, right? I have no idea what's happening next, which keeps me on my toes so that I can professionally show you exactly what to look for. This is how I'd be trading this stock, were I trading it live. Where would the next entries be in this stock? I'd be conservative. I'd look for, say, whatever, like I said here earlier, 389.5 on the short. Earliest next long would be what? I'd make it close this window here at 396 and say 396.7. I would avoid now trading inside here. What's going to happen? What's going to happen now is you're going to see a bunch of amateur traders, try and get into entries here inside here and get killed, right? You don't want to trade inside ranges. If you get the first initial major pivot, which we did, bang, and you got the secondary reversals, which we did, bang, then you close out and you sit on your hands until the stock takes out new highs or lows for that day. So I do not touch a stock in between 390 and 396 for the near future, right? I think the most likely next trade would be 389.5 short. Okay, we'll come back to this one later, see what it's doing. Let's go back to see what Amazon's doing. You see it? That's how you do it. Bang, bang, bang. What's going on in Amazon here? 38, we're almost at 38.15. Where would I go long in this stock? And again, you shouldn't have to take any length of time to figure this out. If you're a trader, you trade. 38.25 long. 38.25 on the long or 37.4 in the short. How would I confirm that? Well, if I see a lot of large numbers on the left, which we're starting to, which is good, right? 70 by 5, 78 by 10. This is a sizes imbalance. One of the signals we look for, a speed trap. And this is the third of 4 signals that I want you to look at in time and sales. We covered 2 of the reversals and the continuations earlier. If you remember, one is looking at what the tape's doing at whole numbers. The other is looking at what the tape's doing during a pivot, as evidenced by a reversal candle. In an example of Google, we saw a red candle after several green candles, and then we confirmed that with time and sales. A speed trap is if the stock continues to move up, but we start to see large numbers on the right, even though we're looking at a long, right? Let's say we're looking at 38.25 long. It's not there yet, but if we start to see large numbers on the right as it gets to that number, that's a red flag. Tells me no go. I would not take that trade if we start to see large numbers on the right side, which is the sell side. This is buy times sell or bid times ask. The ask side of the sizes column, right? So what we're looking at here, 38.25 long. 37.4 for the short. Let's go take a look at some other stocks here, shall we? There's a number of ones here that I want you to take a look at for entries. I've picked out ones from my chart scan service that have nice either gap or breakout patterns. Here's one that looks like let me give you the 2-day pattern here. Here's one that is a 2-day chart, not much going on the previous day, gapped up and starting to sell down. Where would you go short? I don't see any reason why I wouldn't short, say 22.25. I would expect, though, no more than, say, half of this, maybe down to 21.8, 21.9 would be the maximum trade potential. Half of this gap fill range, right? And drop dead, would be to close the previous day's gap here to get to 21.5 would be the most that I'd expect out of this trade. What does this mean to you in tape reading? Well, just confirm a short if it gets at 22.2 and the sizes stays large on the right side, the short side, and the size column gets over, say, 400 shares for a significant, say, at least 40% of the trades. That's the setup, right? In the meantime, it's just bouncing and chopping, so nothing there right now. Let's take a look at some others. You see how this is working? The precision and the accuracy and the speed with which you need to go through these patterns is something that can certainly be a bit intimidating at first, but if you've been doing it for as many years as I have, it gets easier and easier like anything. We're going to come back to research in motion because that one looks good. Seeing if we're missing out on any major moves here. What I like to do when I teach people time and sales is look for new breakouts or breakdowns. In this case, hey, see, didn't I tell you, Google, the 389.5 would likely be next play. We'll see if it gets there. Breakdowns in progress so that you can see what's going on in the tape as the stock is taking out new 2-day highs or 2-day lows. As I tell my traders and have for many years, if there's nothing else you learn from me in using all these indicators, it is simply this. Your best odds of making successful trades are trading stocks that are at or in the process of getting at new 2-day highs or lows. 2-day meaning simply outside of the previous day's range. This is yesterday's trading. This is today's trading. This is now testing a 2-day low, right? That's this pattern. Testing, gap down, bear cup, testing 2-day low in Google here at 390. This is a good volatile place to trade. The first time we looked at it, it was a pivot, right? And we did the bounce and we did the fade, right? Now we're going to see if the stock does the same thing, which it may well. Will it bounce again? Would I use 390.6 again as a long trigger? No, I would not. No, not in this case. You know, that would be the technical entry. I think that the upside potential would be much more limited. I'd rather go short. And let's see if we get there. 389.5. If we took that, bang, we're in the money by half a point already. See how that works? Not too hard, huh? 388.3. See, taking out new 2-day lows in the tape. What would you do if you were open short for my 389.5 call? What would you do? I'd take half of it to the bank right now. I'd cover out, if I were, say, short, remember I said 800 shares, I would cover 400 shares of it right this minute, bang, and take 1.5. Yeah, it's 1.5 or 388. 1.5 to the bank. I would trail a cover stop at where? About 388.3. Right, we're 387. Okay, now I tighten it in. We're 387 in the money. This is good. I would trail a cover stop now at 387.25. That's what I would be looking at. This is important too for you to learn how to trail stops and manage risk and so forth using what you see in the pattern of the tape. 386.25. This is moving nicely in our favor. Where would your next entry be, by the way? I'm going to trail a cover stop here. 387.25, like I said. Yeah, I'm going to stick with that. I think it's likely to bounce real soon here. Just as a by the way, we're 386.7. I would cover out at the first sign of a green candle or a bounce in the tape here. You see we're at 386.5, 386.3. Okay, now trail a cover stop at 386.6. We're now at 3. This thing's flying. This is great. If you were short from my 389.5 call, you're in the money by what? 4 points here? Yeah, almost 4 points. 3 3/4. We're at 386. Trail a cover stop at 387 even. I would cover it all right now on that green candle. Bang! And we're out of there. 386.7. Now, what do most traders do? You need to learn timing. You need to learn your timing. Most traders would sit there and be greedy and say, well, just one green candle. Maybe I'll sit and hold it short longer. No! Wham, bam, thank you. You're out of there. Bang, you just took 2.5 points out of the market. That's how you day trade. Welcome to professional trading. Where's your next entry, folks? Whoop, did you miss it? Well, rewind the tape and go back through this walkthrough there. Rewind the video. That's what you do. You know, that's how you day trade. 389.5, bang. Cover out half here, cover out the half the balance on the bounce over the 386 on this green candle. See how that works? Not too bad, right? What do you do for a next trade? How would you trade it? Well, I'd prefer to go short, obviously, on a continuation. I think it's going to bounce here for a bit, but I would not buy this bounce right now. I would not buy this bounce right here yet. I would be covering the short, like I said, from 389.5. I would not be buying the first bounce. That's a sucker play. That's a speed bump. You don't want to do that. You want to exit the trade using a tape reversal signal. Now, what were some of the signals that I saw here? Let's do a quick debriefing here. What were some of the signals? Well, I told you I was looking at trailing the cover stop at the 387.25, and I was tightening it in tighter and tighter as the stock continued to move in my favor, and that's an important strategy. Then when you see a visual confirmation, like a green candle forming on an open short, that's an obvious get out of Dodge sign. You take the 2 points to the bank and you're done, right? Not too hard. In fact, looking at the next trade here, we're at 387.9. I would be looking 388. I might go light shares short on a drop under 387.4. Okay, we're at 388 and it's bouncing. I would park a short trigger at 387.4. Earliest long, yeah, let's use 388.6. So 388.6 on the long side, 387.4 on the short. And what you do is look at the tape. What's going on in time and sales here? We're at 388. Remember, each whole number increment is and for the cheaper stocks, each 10-cent increment. For Google, each whole number increment is a battlefield between buyers and sellers, an imbalance, a place that you spot to see whether or not one side is able to continue with its march forward, or if the other side comes in and takes control. It's like two battlefields, or playing a game of chess. And you see people going back and forth, and they're pushing each other back and forth in the tape. Let's see where this stock moves next. Anyway, let me give you some other examples here with lower price stocks. I know not everybody trades Google. This is a very good example of how to use time and sales to trade a high price stock correctly like this. That's 1, 2, 3 winning trade calls in a row. The bounce long, the short up here, and then later the short under 389.5 and cover right there. Right? And that's not luck. And this is live. I have no idea what's happening next as I'm going through this for you. Let me give you some other examples. Oh yeah, by the way, while we're on let me give you an extra bonus here. One of the things that you want to do is link this stuff together and look for, this is how I scan for stocks. It'll probably be hard if I keep that here. Let me put this over here so we can scan. What you do is click on the percent change and you get all these stocks in. Most of these are stocks priced over $20-30 a share with at least a 2-point average trading range. And what you do is sort by percent. And again, this is compute change from open, okay, for the percent. Most of the software out there computes it from previous day's close. That's totally worthless. This one looks interesting. AMD. Where would you, this is the big picture 2-day chart, you can see the stock has a range of 42 to almost 40. Where would you trade it? I would not ever be looking for a long inside here. I just look to short it if it loses 40 later, right, like 39.7. Just so you know, it's kind of a gimme, but that's the way we look at this. This one looks more interesting. This one looks a bit more interesting. I don't like the volume isn't too good though, only about 10 to 15K. But it's a nice easy one to follow, so let's take a look. What does the tape tell you about this stock? What's going on? Well, first thing I look at, again, is the speed of the tape, the average share size, and the sizes and balance. You see how the numbers on the right here of, all the numbers that are double digit, the ones on the right are the larger ones, at least right now, or were for, scroll back in the tape here. You see 49, 38, 48. This is bid times ask. Again, this is showing ask or sell pressure is larger, so that's good. What are we looking at here? Well, I don't go short into a quarter point over a whole number because typically you'll see a bounce and chop near the whole number. So I'm going to look at, say, 66.8, 66.7 for a short continuation if and when the stock gets down there. Earliest long would be if it breaks over the half point. Again, I use half points and whole number increments as in my technical ledges for entries, and I view with suspicion the areas within a quarter point or 0.3 above and below each whole number, right? So that's why I use that. 67.6 would be my long, and I would use 66.7 as my short. What's going on in the tape here, though? What's one of the symbols or the signals that we see? Well, let me give you what I call a power tape reading pattern. And what I want you to do is look at when you for example, add to a position, or if you're looking at doubling up on a position, what are some of the symbols or signals that we look for? The first thing that I look at is the share size volume in the 1 minute chart. If I see and this is a good really good strategy to remember. This is one that I haven't covered before. I will typically adjust my share size to what I see in terms of the size of the volume bar here. So let's say my average share size is 300 shares, and I'm looking at a short if the stock takes out 66.7, let's say I'll do 300 shares short. But if the volume picks up, let's say they pile into the stock and it, for whatever reason, some program trader sees it, or you see a lot of new interest from the trading community in the stocks that flips on other people's scanners and you get more volume in it, then I may well double up and go into 600 shares. The only reason I would do that, though, or the only confirmation of why I would do that would be if the sizes column is shows the ask number is significantly larger, double digits on the right, and our average share size is over 400 shares. You don't see a lot of onesie, twosie trades. You see these nice blocks coming in, like 2,200, 1,000 shares. That tells me I'd be more aggressive on a short. See how that works? So that's one of the, what I call a power tape reading pattern, is when to double up is looking for when you see double volume. So if I see 30K or better share size in this stock, then I would double up on or use twice as many shares as I normally would if I see confirming indicators in the tape. That's one of the patterns I look at. Okay, let's look at a fade. A fade is a bounce, and in this case for a short. I do not like bounce trades, by the way. Of all the types of fades, and fade, F-A-D-E, fading is simply going against the initial major trend. I keep my trade attempts for fades to less than 5 to 10% max of all trade entry types, which is in marked contrast to what you see out there in much of the trading literature, where people are saying, hey, here's how to do pivots and here's how to do reversals, and if the stock gaps down, buy it. Nope, I don't think so. Only in very select circumstances you do that. For the most part, you go with a trend, right? And one of the things that you want to use the tape for, time and sales, a tape reading pattern, is to help you identify when to fade, or in this case would be a bounce. And again, remember I had said 67.6 would be the bounce signal. What do we want to see? Large numbers on the left coming into the tape as it starts to get over that. What I would expect to see, though, is a kind of a half-hearted chopping around near 67.5, and then a bear cup, and then a roll on down under 67. That's what I would prefer to see in this stock as it moves. Anyway, we'll give that one a few minutes to work out. If you're like me, you don't have a lot of patience to sit there and watch stocks move slowly. I like to go where the action's at, so that's why I'm always scanning. Again, you sort by percent change and see what the largest numbers are doing, the largest percent numbers are doing. Baidu, XMSR. You see stocks like this, by the way. You see a couple of green candles, that tells you it's not likely to continue short, right? So when I'm scanning, I'm looking for ones that continue red like this, right? And you don't see any sign of buyers coming into this. Let's take a look here at Baidu. Actually, there's not enough volume in this stock. I like at least 20K shares. If I were to 20K per minute share volume. But if I were to short this, it would be the same thing. Say 47.4, 47.3. Since it's already moved a point, I'd like to see an opposing green candle first and then a breakdown under, say, 47.3, 47.4. In time and sales, one of the patterns that we're looking for is to see how fast it's able to take out each 10-cent increment. So how fast did it take out the 48 even, the 47.9, the 47.8, 7, 6, 5, 4, 3, and so forth? How fast is it able to take out each 10 cents? The faster, the better, right? One of the things that most traders, or many traders that I've worked with, do is they will overtrade weak patterns, and that causes them to lose a lot of money. Now remember what I said. Typically a strong stock will continue to be strong further than you would normally think it would go, right? Traders fear, and I shared this fear when I was early in my first year or two of trading, is that, well, gee, I'll miss out on the run, right? I'll miss out on buying a move up. This is back in the 90s with the internet stocks and so forth. I'll miss out. Subsequent to that, during the crash, I'll miss out on a breakdown on a short because it's already moved down so far. What I found to be instead the case is that typically it's safer to give yourself a wider margin of, stay out of the stock area than you normally would. And one of the things that I get as a frequent question for my chart scans alerts is, hey, Ken, your alerts are set pretty far out. and half of them don't trigger. Well, that's by design, folks. The other half that do produce a very high percentage of winning entry rates on the paper trading on the entries and exits for those alerts, because I'm very stringent and very very demanding in what I expect out of a stock before I'm willing to trade it. So typically I'm looking for new institutional or larger volume bar size coming into the stock as it's taking out new highs or lows. Okay, let's see what we have going on here. 47 and a quarter, so hey, 47.4 would be okay. I would be trailing a cover stop at what? 47 and a half. The reason I got into this trade short was that it lost the 47.5. If that reason's violated and the stock bounces back over that, I would cover it out. In fact, here from 47.4, I'd be covering out half of it because I'm going to expect the stock to bounce soon as it approaches 47. So I'd cover out half of it and take, a quarter, 0.3 to the bank, look for another entry if it loses the 47, say 46.8, 46.7. And again, the earliest long would be up here at 47.6. So I'd cover half of it now, trail a cover stop at, let's say, the initial entry, 47.2 on the balance, and that's it. And that's how you use time and sales to manage your entries and your exits, right? It's a very precise, accurate, professional approach that you need to take in this. Many of the traders out there are using platforms, whether it's data platforms or trading platforms, that are completely unsuitable for intraday trading. Look at the precision at which I'm going at this, folks. It is, using a scalpel. That's the right way to trade. Oh, by the way, here we are with that AMD. Remember I said we'd be looking at it for a short if it gets under 39.8, so 39.8, 39.7, either of those should be fine for a short. Somewhere, I would use 39.7. A loss of 39.7 would be my short entry, and we're currently at testing the 39.8 here. The reason I move that down to 39.7 is because we see a small green candle here, some indecision. What I want to see is new volume come in and see the stock pile in at, say, 39.7 and large sizes in the tape on a breakdown. You see how that works? So we'll come back to that in a minute. 39.7 though in the short. Let's see what's going on the green side. Today's a pretty red day for the market, but we'll see if there's anything, the nice clean pattern that is worth a trade. Just looking at these, well, let me bring this up for you. These are stocks that I would not trade, okay? Just so you know, this is a quick example. Why not? Because they're cheap and they don't have nice, wide, clean patterns. Again, I like to use example of Jessica Rabbit's legs, or nice long leg stocks that have wide, clean trading ranges that are easily defined, or large gaps like Amazon. This is a stock I would trade, right? On a move again over 38 and a quarter, down under 37.4. Still hasn't done that. Stocks that have choppy, indeterminate ranges like these. Again, this is not a green market day, so these are all pretty bad charts. I'm not going to look at those. Let's go back to our red charts. No, because too choppy. NMTI, pretty good volatility in this stock, but I wouldn't trade it in its current range. This one looks fine though. Baidu, yeah. Like I had said earlier, 47.4. Moved down for us a bit. Looks like it bounced back up to the 47.4, right? So we'd be covered out. Next short would be, 46.7, 46.8. I would go in earlier, again, using time and sales, if the stock gets more volume. So, for example, if Baidu were to get down under 47 to 46.8, and the volume got up, say, to 15 to 20K, then I would be more likely to enter on another short at 46.8, right? If it doesn't do that, if it just chops down on low volume, I would leave it alone. I wouldn't trade it, right? So I hope this is starting to make sense for you as you're looking at time and sales. Again, to recap, some of the things we're looking for is how fast the stock takes out each 10-cent increment, or for higher price stocks like Google, how fast it takes out each half and whole number point increment. What type of sizes we have, what's the ratio or the mix of 400 plus share size transactions, and preferably blocks up at 1, 2, 5, 10, 20K shares. And finally, what's the sizes in balance. Okay. Now you know that. What I want you to identify here are some of the pivot patterns and continuations for stocks as they move. Again, this is kind of the mechanics of what to look for. Here's an interesting chart with Biogen. Let's see the total picture here. Nah, not enough range. This looked good until we looked at the scale of measurement over here, and you see what? There's only how many points range? 1.5 points, right? 44 to 45.6, 1.6 points range, which is under the 2-point threshold that I want. I want to see stocks that have at least a 2-point range. So, in an otherwise, interesting looking chart, which this is, it's a new 2-day low breakdown, I would not be trading this because the maximum trade potential is just I won't say a Fibonacci percentage of, whatever, 68, 50%, but it's a small percentage of the total average trading range. So for that reason, we prefer the stocks that have at least a nice 2-point range with them within their trading pattern to work with. So I'm thinking here, if I were to make money in today's market, where would it be? Likely Amazon, Google, and Baidu on successive breakouts. All internet plays, right? Possible other onesie-twosies here and there. See how AMD has not taken out 39.7, right? It's bouncing. Would I buy this? No. Because there's not enough range. There's not enough range. If there was a 6 or 8 point range, then sure. What's going on in Google here? Well, we're down to, 386, 385.9. Where would a next short in this be? It would be a loss of the 384. Likely, if we had taken a short at, say, 384.7, it would have moved in our favor by a bit, but come back to the initial entry, and we would have gotten out even or maybe with a slight win, but nothing to write home about. Let's see where the next trades would be in this. This is a pivot pattern. You see 1, 2, 3 green candles. Like here, 1, 2, 3 green candles, and then it rolled over, right? Here it is, 1, 2, 3 green. We're going to see if it rolls over here. I would not go short into this range. Using time and sales, long 386.6. That's my call. 386.6 for a long. Next short, 383.7. I would make it lose that whole number here under these 3 green candles, right? So again, these can show support, but again, this is overall a technical downtrend, right? Lower lows, lower highs. It's definition of a downtrend. So odds are this stock will continue on down, and our best odds play, the one in which I would be trading larger shares as we did earlier, here with that 388.5 short call from earlier, would be down at, say, 383.7. That would be the best entry. I would not trade inside this 384 to 386 range, right? I think it'll close here, but it may well bounce and chop near the 384. So I want to see it get under 384. Let's see what it does in the tape. So you're all equipped now with the exact tools to look at. What are some of the things we want to see here? You make the call. Again, think of it like a pre-flight checklist of things you want to see. Sizes, you want to see larger sizes. A lot of the 1, 2,000, at least 400 share trades, not a continuous stream of 100 share trades constantly, right? We want to see it thicken up with larger size. The other thing is we want to see sizes in our favor. Long at 386.6, I'd want to see these large numbers on the left. Short at 383.7, I'd want to see large numbers on the right. And then the speed of the tape, the velocity of the tape. That is what I will call my second of the power tape reading patterns. Is we want to be able to identify the speed or the velocity of the tape. And again, this is separate from how fast it takes out each 10 cents, which is another thing you're looking at. But what's the overall speed of the tape as it takes out new highs and lows or pivots compared to what it did during consolidation periods? So that's take close note of that. That's a contrast. How fast does the tape move? And that's one, an indicator I'd like to see added to the tape is a transactions per minute or share, some kind of transaction. Actually, not just transactions, because market makers will work reserve orders, and that could game the indicator. So I would use total share size per minute as a function of the price per minute, and have some kind of velocity indicator on the tape. In the meantime, no one has come up with that, so you have to do that just manually eyeballing the tape. How fast does the tape move? And what you will notice is typically on new breakdowns and breakouts, if, for example, Google takes out 384 and starts to take out new lows, then you'll see the tape start to speed up faster than it is right now, right? And that's one of the signals that you want to look at in professional tape reading. You want to be able to see how fast the tape is moving. The faster, the better. Now, what does that mean in terms of actually entering a trade? Well, that means that again, I always like to use limit orders on entry and market on exit just to protect myself on entry. So for example, let's say you have and it was found out that one major broker that a lot of us used back in the 90s they were fined $150 million by the SEC or whatever, but they were front running all their orders, right? And I won't mention their name, but it starts with the letter D and ends with the letter K. And anyway, they were found guilty of front running a lot of order flow, and they were guaranteeing 60-second executions, which back in the 90s was great. Now we've got 3 to 5 second executions with good direct access brokers, which is good. I use CyberTrader, and I've never had a problem with them. They've been a good broker to work with. I use CyberTrader and eSignal. That's who I use. Anyway, so use limit orders for entry. And how would you manage that in this? Well, if the stock's moving really fast, you're not going to get in the old analogy about people trying to crowd through the doorway of a burning building or something. It's hard to get everyone through at once. So same thing with order flow. You may need to park an entry order, say in this case 0.3 out of market just to get a fill, right? But it's unlikely with this much volume. 386.6 likely to get filled easily. And I would be trailing a stop at that entry, by the way, or 386.5 at the drop dead on this. So if I take a dime haircut, hey, big deal. We got over 2.5, 3 points worth of wins earlier. I'm going to manage risk very carefully as these stocks move. Anyway, it's continuing to move up, and what we look for is the speed of the tape. The faster, the better. If the tape starts to slow down, okay, I would get out right now. It took out 380, so I'd take a 10-cent stop here. No big deal. Maybe 15-cent stop because it took out the 386.48. Would I get into this stock again? Yeah, actually, I'd use 386.7. Would I use 7 even? Yeah, I would actually. Yeah, 386.7 for the long and 383.7 still for the short. And that's how you trade it, right? It's very fast, very accurate. That's what I call a speed trap, or a good indication of the tape slowing down. If it slows down, starts to take out a minor stop, then you're out of there. 386.7, hey, we'd be in long again. We'll see if it continues on up or if it drops, right? And again, the price of being wrong, this is critical for your trading. The price of your being wrong should be no more than a 1/4 point or so per shot at the market. Yeah, and that would be another stop. So no big deal. So that's 0.4 worth of stops and over 2.5, 3 points of wins. That's fine. It's no big deal. 386.7 I would still use as an entry if it takes out 386.7 again. I still think that's a good entry. Short, pros only, because the tape is starting to speed up. Now this is one of those times where you have to be disciplined. No, as much as I would want to call a short here at 385.7, I'm going to hold off on it unless I see the numbers flip. See how the numbers on the left? This is the third of the power tape reading patterns. When you're looking at fade plays, one of the things that you need to make sure that you have in your favor is the sizes column in your favor. And if you see, for example, see these numbers on the left, that indicates buying, right? So this would not be a good place to go short on a loss of the 386. Even if it does, price takes out 386 to the downside, we still had some immediate past prior long signals in the tape to be cautious about. So I'm going to be careful. See how those large numbers on the left? So I'm not going to look for short here. Nope. Not unless that flips. If it flips, we'll see. And personally, I would not be shorting here. I'd look for 383.7 as a short. I think it may well close this, but the odds of being right and having it continue in our favor right now would be rather slim. So because it's not taking out new lows and it may test and bounce. All the traders who are watching charts are saying, hey, if I'm right and short, I'm going to get out here before it tests previous support, right? So instead, we want to be more cautious and say, again, this is just good trading discipline, is not to get in short here, even though it is starting to look like it's short. Wait until it takes out the 384 on the downside. And I'd still use 386.7 on another attempt for a bounce long, and I would avoid trading inside this 2-point range, 384 to 386. Get it? Okay, let's go through a few other quick examples and see if there's any other tape reading patterns that are worthwhile noting. Again, I'm talking to you just like if you were sitting here next to me, and I'm showing you things. You're sitting. I always do these training sessions and these videos as though I were sitting here, just me and you. You sitting next to me here in a chair, looking at the monitors over my shoulder, and I'm pointing out things to you. looking at the different signals. Looking again at the percent change stocks to see if there's any major moves that we should be on top of. Interactive gaming looks like it's no, not enough range. Even though it's taking out new days highs, it's not enough range in the chart. Even though that's one of the percent gainers at plus 2.9 for the day. Okay, let's see. Going to go through the other ones for my chart scans. Remember, try the chart scan service if you haven't already. What are the technicals on this? Short at 8.4, right on a bear cut breakdown. Tape reading, seen multiple tests of the 9, right? Maybe 8.8. If the what side, the ask side, these numbers on the right get larger. And again, I don't know that any other data platform out there provides this level of detail to you, and don't try and wing it. I mean, you can try, eSignal should pay me, but they don't. But or it'd be nice if I got but I'm not, I'm very unbiased in what I say, so I hate to sound like a broken record, but I really love eSignal because it gives you all these exact indicators that are so very important. And you can't wing it by saying, well, I've got this other data platform and it gives me charts, but it doesn't give me sizes and I don't get the pre-market chart, but let me see how I do anyway. Thanks for playing. That's not how to trade. You need to have as much data as possible to make informed decisions. That's a good rule of business management and life in general. The more specific your data and the more database decision-making processes you have in your life and your business, the better. Most people are just too stubborn, or they're too cheap, or they want to get by on something less. And again, don't bring a knife to a gunfight. You need to have specific, accurate patterns like this in the data platform to be able to leverage the information you're seeing. Anyways, what are we seeing in the tape? What's the signal here? It's still long. It's a long tape, even though we're in a candle patterns showing a bit of short action. It's still a long tape. That's one of the third of the tape reading patterns for fades, when to double up, and continuations. For continuation, make sure that you are identifying the difference between a long tape, and if I could put this in letters on it, I'd say long tape versus short tape. And a long tape is a tape in which most of the transaction sizes on the left side of the sizes column are larger than what you see on the right. A short tape is one in which, say for a given 10 or 15 seconds worth of data, you see larger numbers on the right side. If the numbers, by the way, by larger numbers I mean double digit. Single digits are noise. They're inconsequential. 1 by 8, 2 by 5, 5 by 7. That stuff doesn't mean anything, but these do. 2 by 33, 2 by 58, and so forth. So 76 by 9, that's a significant statistical point, a significant data point. So anyways, is it a long tape versus a short tape? What I'd want to see here is 8.8 short and a short tape. I'd like to see large numbers on the right. So far, this is mostly what? A long tape. Most of the numbers we've been looking at here have been large numbers on the right or on the left side. So I'd be cautious or would not go short unless it flips to a short tape. Okay, let me see any of the last. I'm looking through my chart scans. Be sure to try my chart scans if I'm offering it at the time you're looking at this. Alternately, I will offer my live room or chart scans or so forth. It's a good way to test your, if nothing else, test what stocks you'd be looking at and where you'd be going long or short in those stocks against what I have is my answer key for the market each morning. And the gaps in the difference between what I say and what you say is very instructional. So, hey, why did he look at that one? And then pull up the chart and see why I looked at it. Odds are will be because it was a large gap or a wide range chart that was well defined, high volume, high volatility, and worth a trade, right? Anyways, let's see what else we have here. I think that's it. Our favorite stock of the day is still Google. I wish we had some cheaper stocks to look at, but this is the best one to look at to demonstrate. And again, don't worry about it that it's a expensive stock. The principles are the exact same. What are we looking at here? Remember I said 383.7 was my short call for this, right? I would be covering half of it now and trailing a cover stop at 383 and a quarter, right? Just a quarter point over that whole number, right? I called 383.7. Where'd your next short be? Hey, just lather, rinse, repeat like shampoo. 381.7. Would you be looking for a bounce long here? I don't think so. We're still short from paper trading in 383.7. That's good for almost a point here for you, right? Again, these are all live calls. I have no idea what the market's going to do in 20 minutes from now, which keeps it exciting. I really enjoy this. I enjoy being right, and I hope that I'm teaching. Okay, I would cover it all right now. Bang, cover it all, because we're getting back to near the entry, and we see an opposing green candle. And in the tape, we see that the stock is it was starting to get back up near our cover stop level. We're 383.4, 383.2. It was getting up near 383.5, and so I'd be covering out there. Where would your next entry be? Like I said, 381.7. Where would your earliest long be? I would use, and here's another, this is more of a candle patterns for day trading or visual chart patterns for day trading tip than it is a tape reading one. But next long, if I use a long, would be over this previous low. See how this is a bear cup and a breakdown under 384 for our short? Earliest long would be here, and in this stock that would be over that'd be 384.8 or so. I would use 380. I would still use 385.5 or so as the entry for a long. Prefer to go short though on 381.7 as a continuation. Do you see the speed of the tape now? This thing is flying. This is great. The stock is moving very quickly. We're going to see if it tests 382, 383 here. And again, in the tape, what you want to look at is what it's doing at each whole number increment, and if it's A, continuing, or B, pivoting back into its range, and manage your entries and exits using secondary signals like the imbalance of the sizes here, the size of transaction flow, if we're getting block trades or if it's still a lot of 100, 200 share trades, and what the 1 minute candle chart's doing. And you tie all this stuff together until you become very accurate at identifying exactly what to trade. And you've seen here from the examples, and this is my favorite way of training people at the live market, going through step by step what type of tape reading patterns are best used to leverage your entries, and how the time and sales. The tape can really help improve your accuracy to a degree not found in the candle patterns alone. The tape is kind of looking at the inside of, it's kind of micro trading inside each minute's worth of price action, and you can see that it's remarkably useful for both. And as you notice through all the examples, not only do I identify the entries, but where I would set my initial stop and where I would set my trailing stop, and how I would manage a trade by, say, covering out or selling out half of a position once I'm right, and then trailing a stop using what I see in the tape for the balance of the position. And that's a remarkably important technique. Most traders lose a lot of money because they say, it's like using a butter knife and I'm using a scalpel. They're using, and I remember my own early days of trading using a free data platform and all the charts I could pack onto 6 monitors, and the rest of it. As I gained experience in using time and sales, the one thing that I found useful is, first of all, start off by using the tape to help manage risk, right? It's always a matter of stop the bleeding, stop the pain. So use the tape to identify when you would get out of a stock. And what I do is I put my finger on the mouse key ready to get out at the first sign of the data proving the position wrong. The instant the position goes against you, say by a quarter point or so, click, you're out of there. You can always use the tape to get in on a successive new breakout or breakdown as the price moves to a new 10-cent increment or takes out a new likely support or resistance level, right? Let's take a look at a pivot play. Pros only 382.7. 382.7 on the long, 381.7 on the short. Do you see this green candle after? This is kind of a 3-line, well, it's not a 3-line break, but it's a large bearish engulfing that continued on down, found support at 382. We're going to see it's a 3-line break-ish pattern, if there's such a thing. What I mean by that is this. The size of the whole real body here is large, the size of the second whole real body is shorter, and the size of the third whole real body is smallest. Still, that tells you that sellers are running out of steam and buyers are coming back in just a bit. This may well, though, just be short covering, right? So it doesn't mean that we would go long this stock unless it takes out 382.7. We'll see if it takes out 381.7. Looks like it is on the short side, so that would be the play. 381.7, short and right. How would you manage it? I'll try to cover stop at 381.8. Use that as the initial stop, 381.8. And watch it continue on down in our favor, right? And that's how you trade. Anyways, hope this has been a useful activity. You're looking at getting back to one of the first things before we wrap up here, the pre-trade, let's say you're watching a stock that's not doing a whole lot, like Amazon hasn't done much this morning, I would still be looking at it for a short under where I said I would at 37.4, right? And it's even kind of confirmed because it's tested and bounced off 37.5. It's making a bear cup here. 37.4, this is the pre-trade action of the tape. What you want to do is, and I'll leave you with this parting thought, it's an important one, is in electronics, electronic design or electronic engineering, we call characterizing or understanding the behavior of, instead of electronic circuitry and signal strength, we're looking at, in this case, what's going on in the speed of the tape and what's the general picture of the stock using time and sales. What does it look like? How fast are the transactions going? Make a snapshot of that mentally in your mind's eye, so that when, or if and when it gets under, say, 37.4 for short, or over 38.25, 38.5 for long, you'll see a speed up. You'll be able to detect the difference, or visually see the difference in time and sales as it is taking out new highs or new lows in volume. So you have a visual picture of long or short tape versus consolidating tape, which is what this is right now, and be able to use that in your trading so that you have in your mind's eye a picture of what the stock looks like when it's at consolidation in time and sales, right? That's your baseline reference or your benchmark point. From there, you can then identify when something significant is happening, when the stock is taking out new highs or lows and is therefore tradable on a breakout under support for short here at 37.4, breakout long over, say, 38.25, 38.5 is the next one. All right, well, that wraps it up for this session for tape reading and using time and sales patterns. Hopefully I've added to your knowledge beyond what you've already learned from me and my other resources for using the tape. It's an important tool, and it's, if I had nothing else to use, I would still want to have my candle charts, but having candle charts with time and sales gives you the best of both worlds because you see exactly what's going on tick by tick, and you can manage your risk as well as your entries and exits much more effectively. This is Ken Calhoun, DayTradingUniversity.com, signing off and wishing you the best in your trades. Thanks for being my customer, and take care. Goodbye.